New Zealand interest rates once again performed quite poorly yesterday, moving up in all lengths of time. The reasons for this move came after the People's Bank of China made it easier for their banks to lend by reducing their reserve requirement ratio by around 0.5%. 5-year interest rate swaps in New Zealand are now up around 0.6% since we experienced almost all-time lows in that duration only around 3 weeks ago. Overnight, most markets were reasonably muted due to the fact that it was a public holiday in the US. However, news that the Greek government will likely be provided the further 130 billion euros that is needed to refinance their debt to avoid a bankrupt will be passed. This did see European markets up between 1 and 1.5% in last night's trading session. As economic data out of the US offsets the limited growth that we've seen in the European zone, the New Zealand dollar has been strongly supported. The reason for this support is the fact that the New Zealand dollar has a higher interest rate yield than many of the overseas nations, particularly the US and Europe. As a result, overnight we saw the New Zealand dollar boost up around 85 cents against the US dollar. We're seeing the New Zealand dollar higher against most major trading partners. Even against the Australian dollar, we're now up to 78 Australian cents. As a result of the higher interest rates that we're seeing, particularly in the long end of our interest rate curve, our ASB economics team has increased the currency forecast for the New Zealand dollar against the US dollar. By the end of the year, we potentially will see the New Zealand dollar hit around 88 cents, and into early 2013 the New Zealand dollar could go up as high as 90 US cents. The major reason for this is that the prospects of the New Zealand nation are being more and more tied to the end result, what is happening out of China. Around 60% of all merchandise exports now goes to the Asian and Australian zone, and with the higher interest rates seen in New Zealand, it is likely that our currency will be supported into the medium to longer term.